All right, so I think we'll get started, and I'll just introduce myself. For those of you who don't know me, I see a lot of familiar names on the list here. So I'm Kenda McKenzie. I'm the acting general manager of Halifax Water, and we have our team here today. Megan will be guiding us through the slides. I'm going to get us through the introduction, and then we'll be turning the floor over to her for the conversation. But we have some of our team from our asset management group, from accounting, and our capital group. And so I know that there's a suite of different interested parties that have joined us, and we appreciate you taking the time to participate in this. And we're hopeful that this is a good method of communicating, knowing everybody's busy and it's hard to coordinate in-person events and that type of thing. So these are being recorded, so we want to make sure everybody understands that, and they will be available afterwards. If you know of somebody that may want to revisit it or look at it, or if you yourself want to revisit some of the conversation. And please feel free if you think we've missed any individuals or groups. We've tried to reach out to a lot of the development community, those that participated in previous filings related to the regional development charge, HRM, of course, Department of Environment, and board consultants and members of the board. So I think we've got a good cross-section of people that would be of interest as we talk about our regional development charge. So I'm going to get started, and we will have opportunity throughout the presentation for feedback, comment, questions, and hope that just if you can use the hand raise sign. I know Megan's driving the presentation, so she may not see some of the hands, but I will try and monitor that and find a good spot to interject and have that question or comment brought to the forefront. And when you do, if you could just introduce yourself so that we know who you are and who you're representing as part of the conversation. Okay, so thank you very much, and we're going to get started. So this is our workshop number 1 related to our regional development charge update, and it's focused on population projections. And so we're just going to do a brief overview for some of those that are new to the conversation about what a regional development charge is, a snapshot of the current state of our regional development charge, and how we're going to proceed with some of the interested party engagement over the coming weeks. And so, as I said, the first one is for the population. So what is a regional development charge? So regional infrastructure upgrades that are triggered by growth have been identified through our integrated resource plan and our process. And they are funded through what we call the regional development charge. And all new development right now must pay this cost or this charge that's related to growth and to cover their impact of growth on our infrastructure, and is paid for at the building permit stage. In 2014, Halifax Water established the first regional development charge, and it was a bit of an evolution. HRM had a sewer redevelopment charge for wastewater, and we looked at how do we structure a similar type charge, which had a more comprehensive list of infrastructure that would be impacted by growth. Also at the time, there was no similar charge for water infrastructure, so that was introduced in 2014 as well. Coming out of that, the intention was to update that every 5 years. And so the charge was reassessed in 2019 with the foundation of the second iteration of that integrated resource plan, and was approved by the UARB in 2021. And so we have a 5-year cycle that we need to be on for doing these updates. Some of the examples of regional infrastructure, when we look at what is eligible for funding or what's being considered, when we look at what's the cost drivers, would be our water supply plants, our wastewater treatment plants. So some of the bigger infrastructure pieces, not necessarily the local pipes or anything like that on local streets. Also, when you look at the big infrastructure, it's the water transmission main. So the 60-inch water main that's taking water from Pockwalk treatment plant down into the city, for example, and the large wastewater collection infrastructure. So if you think of some of our tunnel infrastructure, our main pump stations along the harbor and the waterfront, those types of infrastructure. So it's in that size and magnitude that factor into what a regional development charge is funding. Next slide, please. So one of the other things that we are required to do with the UARB is submit a report in June, basically what is the current state of the RDC. And so based on the numbers from July and looking at the end of our fiscal, the water and the wastewater regional development charge are both in a positive cash position, with a combined the net balance of $93 million, with the implementation of $48.2 million in infrastructure projects. The Regional Development Charge Program is anticipated to be cost neutral to the existing wastewater and water customers. So we're not, growth can't be subsidized by our rate base. And so that's one of the fundamental principles around setting up the charge. As well, we're looking at fulfilling the desired need. We want to provide water and wastewater services for the projected growth within the municipality in a timely fashion so that growth can continue on as projected and foreseen. Next slide. So the other piece of when we look at what are we doing in June when we make those submissions, one of the things the RDC was established was, as I said, we're supposed to update it every 5 years. Annually in April, we update it for CPI adjustments. And then also in June, we're doing a financial check-in to confirm that the charge is within a plus minus 15% range and that we're not over collecting or under collecting. And we report into the Utility Review Board on the status of that every year. The thing that changed in October 2023, as a lot of you are aware, the province put legislation in place to freeze the development-related charges. And so that essentially, as of October 2023, froze the regional development charges as they were. So what that meant was this past April 2024, we did not do a CPI adjustment. They remained the state that they were from the past year. And it's anticipated that the freeze will remain in place until October of 2025. Knowing this, the board has requested us to file our new application in March of 2025. This would allow for the RDC rates to become effective as soon as the rate freeze expires in October. So that's the intention from the timing perspective, knowing that going through a hearing process, there'd be adequate time for that to be in place. So that's our anticipated plan. Next slide. So when we look at what we're doing and what we're trying to achieve with the update to the RDC. Ideally, in a perfect world, our integrated resource plan would be complete and that is our 5-year overview of what our infrastructure needs. And our integrated resource plan looks at what infrastructure we need to support growth, right, asset renewal, and regulatory compliance. So there's 3 pillars that drive the integrated resource plan. And we are about to start our 5-year update, and we currently have a funding request before the board to start that RFP. Knowing that that is probably a 2-year plan and we won't have outputs from it until 2027, we are looking at what data do we have and what information can we use to inform an update to the RDC in today's situation. So in order to do that, we'll be looking at taking our 2019 information from our last IRP, looking at the infrastructure list, what projects did we complete, what projects have been rescoped what projects are no longer required, knowing that certain things have changed from an infrastructure or functionality perspective that would change the drivers or change the scope of a project. Have we identified any new projects that weren't on the radar back in 2019 and adding those to this infrastructure list? Taking this right-sized infrastructure list, we'll be escalating construction costs to reflect current day, and then also revisiting the allocation of what we refer to as a benefit to existing. And some of these will be talked about in greater detail in upcoming workshops, but just for the purposes of this, to give context of the benefit to existing, when we go and do an infrastructure project, we look at it from the perspective of what portion of that project is benefiting our existing rate base and our existing customers. And that's what we consider a benefit to existing, and that is paid for by our rates. If part of that project is benefiting growth and it's regional in nature, it'll be paid for by the regional development charge. The other piece that we'll be looking at in the financial aspect would be reviewing our post-period benefit. And just high level, that is the amount of money. So if we put in, we are doing the RDC on a 20-year future state, looking at what the infrastructure needs are for the next 20 years. Our integrated resource plan is looking at what our infrastructure needs are for 30 years. And that was a decision that was made back in 2014 to do the financial review and assessment and assignment of costs on a 20-year forecast. So there might be infrastructure that we install that will have a benefit to customers and in year 21. And so we have to look at how do we capture those costs. And so that's what is considered the post-period benefit. So it's to the benefit to a customer, a future customer outside of the 20-year horizon of the RDC. And again, we'll be getting into more details on these. Just want to give a quick overview of some of the things that we'll be looking at. Today's workshop will be looking at some of the updated population projection. So we want to talk about some of the things that we're getting from HRM and get some feedback from industry on what you're seeing and what you're seeing and predicting from a future state. We're also, with the decision that we received in 2021, we have to look at how we assign the costs for predominantly the ICI, the institutional, commercial, industrial customers, so the non-residential customers, and looking at a methodology that would use residential equivalent units. And again, that's going to be the focus of an upcoming workshop because we want to get feedback as well on the structure of that, and the understandability of it, the collectability of it, and making sure that that methodology is fair and equitable as we try to apply that. And then the other factor, the other piece that we're going to be exploring and putting in for our application, we received feedback from the development community that they would like to see the charge collected at the time of meter installation versus the time of permit. And so we're going to be structuring the application around that approach, and get some more feedback and support from those that would see a benefit to that, and being able to explain the benefit to the development community, and that it doesn't really necessarily impact any of our rate base if we were to collect at that point in time. So these are what we're going to be kind of taking, presenting to you and getting some feedback on to inform our application that will be going in March. Next slide. So what we'll be doing, we'll be presenting some information today and in future workshops. We're looking for discussion and feedback. We know that we'll be still starting our new integrated resource plan, and with the intention of getting a new infrastructure list and using the new population numbers from that. The other piece that we want to flag is that in the 2021 decision, we had indicated that we would be looking at demand side management initiatives, and whether or not there could be projects or programs that on the water side would benefit the development community that could be funded by the RDC. The regulations are structured to enable that type of program and project, but currently we do not have any identified, but we want to keep the door open, so to speak, for those to be considered and thought of. We are undertaking a study to do demand side management, and we'll be probably seeking some feedback from some of the same people that are on this call on some of the initiatives and things that might be doable and feasible in the future. But we wanted to flag that right now, given that we don't have a robust piece of information, we don't foresee that being examined in this current RDC update. As we go forward and we look at opportunities to get feedback, we have set up an email address, and we also have a web page that will be populating with this type of information, so that if you want to go back and check in on something that was said, or a document, that type of thing. But we also want to try and have an open line of communication. If you don't feel comfortable speaking up in a forum like this, or you want to email us with some information or something you thought of afterwards, please do so. And if you know of somebody, as I said, that you think might want to attend, they can reach out to us at this email address, and we can get them on the circulation loop. Next slide. So this is our schedule. I appreciate that it is aggressive, but we're hoping that we have the right people in the room, we're presenting the right information, and we can get the right level of feedback to inform the conversations. As I said, today will be population. The next one will be the infrastructure list for growth. Then we'll be looking at the financial assumptions, and then the REU, or the application of the charge. How do we apply it? When do we apply it? We also have an additional workshop set up that if we need to regroup or revisit any one of these topics, or if something else comes to light as we have these conversations, we have time at the end to try and pull some of that together. Also want to kind of flag that we know that a lot of these things are intertwined and interwoven. We're going to try and keep a lot of the focus on the topic of the day, but know that some of the conversations may drift into some of these other topics. But we will try and keep focused on population today. But if there's something that is relevant that does drift into one of these others, please don't hesitate to raise it, and we will kind of regroup and bring the conversation back as needed. Next slide. And so Megan's kind of broken out the different topics for each of the different sessions. So that kind of gives that framework, so that you can put your mind to some of these things as we go forward. And I think it's pretty explanatory of how we are looking at proceeding with some of these. And I just want to highlight too, I know some of you are familiar with the process with the Nova Scotia Utility Review Board, but as we go through this, we will be, as I said, collecting feedback from our industry partners and any interested parties. And as we go to make the application, we'll make sure that you're kept in the loop on the timing of the application. And there's also a process whereby you can intervene or ask to be kept in the loop and have an opportunity to speak when they usually have an open forum partway through a hearing. And we welcome intervention. It's not a negative thing by any light. It's a great opportunity for you to get copied on all of the correspondence that goes in and out of the Utility Review Board from that process. And it also gives you an avenue to express concerns, comments, questions as it relates to the application that we make. So we welcome every opportunity to get that feedback from our industry partners and the community. And I think, Megan, I think that concludes my intro and overview, and I'm going to turn the floor over to you.
All right. Well, thank you very much, Kenda, for introducing us to the Populations Workshop. So hello, everyone. My name is Megan Wojcinski. You may remember me as a development engineer approving permits. Right now, I sit in the infrastructure planning group at Halifax Water. doing more project work. But RDC is something that I've been involved with and on the front lines implementing the charges to different building permits. So the agenda for this workshop is as follows. We'll kind of go through where the RDC model assumptions fit. We'll take a look back from April 1st of 2020 to right now to see how we collected permits and compare it against what was forecast in that original 94, like matter 9494 matter number was to the URB. There's three assumptions that we'll discuss today, that being the single unit dwelling and multi-unit dwelling ratio, the people per unit, and the population's projections. So as you can see, there is this blue button right here. It says pause for discussion. I have these on certain slides that I will pose a question to the community, to the stakeholders, to the interesting, you, the audience, in hopes to, in order to start discussions. So the first part will be a couple slides, and then we'll really pause and have those discussions. There is kind of a max timing to kind of get through everything. I'm not sure if we'll need it, but I do have a time in mind and will give ample warning before we need to move on. So with that, let's look at the RDC model. So the picture up on the screen is from the matter number 9494. It is the first tab, which is called population projections. And I've highlighted the information that is that we're going to talk about. So this information is available on their website. It is an Excel file. However, Excel files need to be zipped. So it is in zip format. If you have any issues with trying to get this Excel sheet, please email RDC 2025. So as a closer look to these populations projections. These are things that haven't been changed over the last 5 years in terms of how the numbers work. There's this residential growth. This is people. The people are divided by people per unit in order to get the number of units in this column. And then once we have the number of units, we apportion to single unit dwellings using a ratio and multi-unit dwellings. And when we look at what those exact assumptions are, we use 2.04 for the people per unit, and then we use 26% for the single unit market share, and then 74% of the single unit market share. So we're going to discuss those assumptions in the population projections. So before we get into the details of looking into the single unit dwelling and the multi-unit dwelling ratio, let's take a step back and see what the numbers in the model forecast. So let's see, let's put up the numbers that were from the model and compare them to what was collected. For this exercise and for the charts that you're going to see, there's a couple of assumptions that have to be made. One is that we're starting off on April 1st of 2020 using the cumulative units from that date. The blue, the collected, is based on new water permits when submitted. So this doesn't include any refunds or any major changes, but give us a good base of what is coming in as a new water permit. The orange is the model, the 9494 model, and we're just using the units from that. And also, since we're here in January of 2025, the fiscal year is not yet complete. So while the orange line will go to the end of the fiscal year of March of 2025 in the forecast, the blue collected are going to December 20th, the day the data was taken. So although this year isn't done yet, we can still take a look to see what we collected versus what was forecast. So the first chart I have here is the ICI area. So like what Kenda said, the ICI will be discussed in a later forecast, especially against the methodology. So this is just kind of like a bit of a snapshot. So down here we have the years starting April of 2020, and then we have the new ICI area. The orange line is what was forecasted, and the blue line is what was collected in terms of square footage. So as you can see, we didn't collect as much as what was forecasted, and it was almost like the collected is consistently since the lower than was collected. And then you can kind of see here, we're not quite done the year yet. So when we want to look at the single unit dwellings and the multi-unit dwelling ratio, we want to take, we're taking that look back. So here's the single unit dwelling comparison. So again, we have the years down here, and then the Y is the number of new single unit dwellings. The orange, which is the model, is what was forecast, and the blue is what was collected. So as you can see, we collected more than what was forecast. And as we come down to the end of December, we're generally here. However, as you know, we still have more to collect. When we look at the multi-unit dwellings, again, the year, the number of units, please note that this is a scale of 0 to 16,000, whereas this is 3,000. So they're not an apples to apples comparison about units, but they do tell their story. So with multi-unit dwellings, we see the orange line that was forecast, and then we see what was collected, which is more than what was forecasted. So as we look at these charts, I think it's important to know what was happening at this time. I know, like, we started off with COVID here. There was a large increase in May of 2021 with the RDC. That was the matter number 9494 coming in. April 1st of 2023, we had like a 7% increase due to CPI. And we've had no increase since then. And another thing that's kind of come in as I was looking through this numbers and thinking about are the backyard suites. The backyard suites, if a new single unit dwelling's coming in and it has a backyard suite, we would consider that a two multi-unit dwelling, not a single unit and a multi-unit. It would be considered a two multi-unit. So whether that's taking numbers from the single unit dwellings and putting over here, like there would be some type of movement of that, and something that we didn't know in 2019. So with that, those charts were important to really look at this single unit dwelling to multi-unit dwelling ratio. Let's start off what we thought and what the model and what those forecasted orange lines represent. And they represent 26% single unit dwelling and 74 multi-unit dwelling. This was based off of the previous 5 years. So when we look at our past and what's happened the last 5 years, there's been this move towards more multi-unit dwellings. And you can see that the cumulative, so how using the same assumptions from calculated for 94 and 94, we see that we now have a ratio of 13% for the single unit dwellings and then 87%. And taking a look at this number and maybe just doing a bit of a sensitivity analysis, looking at the 5-year average of averages and the 3-year, we see that really like fits in right in the middle there. So as you can see that this is a pause for discussion slide, the question I pose to the community is that as we've looked at our past, the assumption that we made 5 years ago, how we did with that assumption, and now we look to the future, is using this ratio, the cumulative ratio of all the units of 13% for single unit dwelling and 87% for multi-unit dwellings, is that reasonable to use in our future for the next RDC? If you need me to go back on any of the slides or have any questions, I'm more than happy to do that.
Micah has their hand up.
Hey, sorry, don't have an answer to the question, but just had a question. It seemed like you folks were forecasting more than you collected, but then for both the singles and multis, you collected more than you forecasted. So just, I was wondering if I read that wrong. Because yeah, for both the singles and the multis you guys collected, is there something that went below forecasted?
looking at these charts, the ICI area went below than what was forecasted. However, again, when the money was being collected, it didn't result in like a 15% change to the RDC, but yes, like we don't have crystal balls. So ICI was something that looked like, we didn't forecast enough on that side, and that the multi-unit dwellings were forecasting over then, which was originally assumed.
Sorry, what's ICI?
Oh, my mistake, the industrial, commercial, and institutional. This would be
Yeah.
the area. So if
Perfect.
it's not a multi-unit or a single unit.
And that's one of the difficult ones for us to collectively predict, is the employment growth, so to speak. Like, what is going to be happening in the business parks around the municipality? How much ground floor commercial is going to go in a new multi-unit building? HRM is good at providing the projected people number, but I think we need to kind of get a sense of how do we do that right sizing or prediction of what's going to be that commercial industrial piece of the puzzle. So, and also need everyone to be mindful of the populations that we had back in 2019, 2020. It was before the growth boom that we've seen. So it's when we look at what we've over collected or under collected in different different aspects, it was not anticipating the growth that we've seen leading up to this last charge in 2020. I think the municipality was trending at a nice 1 to 2% growth a year type thing, and it was pretty steady and consistent. So yeah. So I see that I think, and I don't know how, Megan, I'm going to jump in because I don't know if you can see them, but James Goldstein is next.
Yes.
Thank you, James Goldstein. I'm a UARB Board Council consultant. Thanks for this presentation, very illuminating. First, a point of information. Megan, you mentioned that the backyard units, what are often referred to as accessory dwelling units, are counted as multifamily. I just want to make sure that is how you're treating them. And I thought the SUDs, the single units, were both standalone and duplexes, and it seems a little bit incongruous to count the backyard units as multifamily and a duplex as single. Can you clarify that, please?
Okay. Yes, so single unit dwelling, that is going down to one property, one house, one set of service connections. It can also be called a townhouse, where there might be 6 townhouses together, but everyone is on the same property and they each have their own service connections. I think single unit dwellings are just single unit dwellings. Once the backyard suite or the secondary suite comes in, whether if it's like a new build, that will be counted as 2 multi-unit dwellings. Does that answer your question?
And
it does.
Sorry. I might, if I can provide a bit more context. When we set the charge in 2020, backyard suites weren't as permissive as they are today. And so another thing that, as we kind of turn our heads to how do we set the charge and how are we applying it, what has changed from the ability to intensify on properties? How do we count those new units, the net news? Backyard suites, we've seen a number of different servicing strategies. They could have a new lateral independent going to the main, or they can be feeding a lateral through the main, or through the house that exists. Also, when you look at the auxiliary suites, they could be in the basement. And so it's how do we capture that properly? So it might be a bit of a housekeeping amendment, so to speak, on getting input on how do we collect that so that it's equitable and it's counted properly. So it's one of those things that we'd be looking for feedback on as well.
Okay. If I may, Megan's question about should Halifax Water use the cumulative 2020 through December 24, the 13 and 87%, if I understand the question correctly. I'm looking at the numbers above for SUD and MUDs, and they're pretty volatile. And the 24-25 numbers are, back to close to what they were in 2021. So it's difficult to ascertain really what the best assumption might be. I might suggest it be a little bit higher on single family than 13, given the most recent year. I realize the average of 3 and 5 years, 12 and 14. If this 2024-25 represents, if you will, a new trend, you'd be, overstating the multi-unit numbers. I realize it's a judgment call at this point. I certainly would go no lower than the 1387. I'd go a little bit in the other direction, just given the last year's numbers. And I would suggest before making that decision, I'd wait until you have as much data for 24-25 as possible. Those numbers, I guess, could also change.
Thank you, James. The next person is Peter. Ollie, because we might have more than one Peter on the call.
Yeah, thanks, Kenda. I just want to circle back on one of the slides. It looked like the same number of people per dwelling unit was being tracked for single-family homes and MERBs. Is that correct? I think it was 2.04 people per unit.
Yes, the people per unit is 2.04 that was used in the application. We do have a section within the presentation, which is actually after the break, to specifically talk about that number.
Okay. So it's broken out later in the presentation
yes.
to reflect the difference between the two? Okay. I'm wondering if you've done any sort of analysis to look at the spread between the number of MERBs actually built versus projected on the basis of the underlying assumptions of the number of people per unit, because I would maintain that the number that was historically used, which I think was 2.25, grossly exceeds the actual number of units of people per unit, probably by an order of magnitude of about 50%, and that the actual number of occupants in new MERBs is probably closer to 1.5. So you're going to get a 50% extra count in terms of the number of units being built, because the underlying assumption was flawed. So it's not all just looking at the number of units, it's what's driving the number of units. And it's because there's less people actually living in them based on our portfolio and our experience.
Yeah, and I think this is the good and the right conversation that we need to have when we start to basically, and probably jumping ahead a little bit, but conceptually we look at the projection of the people so that we can size the infrastructure. Then we get a cost for the infrastructure. Then we have to convert that number of people into some measurable unit that we can apply the charge to. So that's when we start back calculating, so to speak, to come up with how many units does that look like and how many people are in a unit. And in some cases, we've been relying historically on Census Canada data and that type of thing, and we need to revisit what data sets exist that we can use to support how we set the charge going forward. And so that's where we want to get that input. That are there things that CMHC is producing or somebody else that we can draw from to provide that conversion, so to speak, to set the charge.
Yeah,
and
because
yeah,
the ratio of the assumed number to actual will actually result in an over collection of fees by that same percentage if you work through the math.
yeah. So that's where we want to right size the ratios and the people in the units, if at the end of the day, that's how the charge gets applied. So,
Okay.
yeah.
All right. And then we have Mark.
Yeah, but it's just an observation on the Mark Van Zoomer, I'm with the Stevens Group, and I'm president of UDI as well. The on the ICI, if you could just jump back to that. There, no, there. The drop off in 2023, 2024, I suspect that's due to the delays of Burnside's phase 13 coming online, and there's a lot of pent up demand, and I would imagine as soon as that subdivision is complete that you'll get quite a spike in those numbers. So probably
that's a good point.
Probably all of phase 13-1 will come online in the first few months. So
when is that predicted to come in? Like, do you think we'll see that by the end of this fiscal year?
I think it's just Halifax Water taking over.
Megan, we're the hold up there, so don't ask too many questions.
You tell me. So.
No, I think what would be probably a realistic, knowing that they'll be working on lot sales, and we have contacts in the real estate group there that we can reach out to get a timing of some of the projections. But usually, and you guys can speak to it, it's probably an 18 to 24 month build for the typical buildings in that area. For occupancy.
And I have at least about 1 million square feet that's going in
right
as soon as I can. So
right, yeah, okay, that's a good point.
Okay, is there anything else? I don't see any more hands up. Are there any more comments about the single unit dwelling to multi-unit dwelling ratio? Since it doesn't look like it, I am going to go into a 10-minute break. This will just give us a chance to get a drink of water, check emails. So with it being 1:45, we'll come back at 1:55. How does that sound for everyone? Hearing no objection. Yes, so since it's a break and the recording is continuous, I suggest you turn off your cameras, turn off your mics, and we'll be back at 1:55. All right, well, welcome back, everyone. That was just a short 10-minute break. We just have a couple more slides to talk about, and they're all discussion slides, which is really great. So we will get started on the next topic. I just have to move the slide deck. Okay. People per unit. People per unit is important because we take that population density and we divide it by this unit factor. So when we look back to what was used in Matter 09494, 2.04 people per unit was used. I believe this was based on a weighted average based on the assumed people per unit. So in keeping that in our back of our mind of using 2.04 people, I have a list of people per unit assumptions from Halifax, from the Halifax Region Municipality, that to use in population projections. And as you can see, there is a variety of them, from 1.9 people per unit using in the regional center, and the regional center is highlighted in blue here, to this suburban at 2.4 people per unit, and then all the way up to 2.6 for the rural area. So my question to the interested stakeholders, when considering people per unit for our next RDC, what number should we use? An option is to use the same methodology that was used for 94-94. What should we consider? All right, Peter, Polly, you are first up.
So is there no differentiation between apartments and single-family homes?
Kenda, can you answer this one?
Yeah, no, and I think it goes to kind of part of that earlier conversation and staging into how do we get to these numbers. So this has kind of a tiered approach to it. We have the infrastructure is getting sized for a population. So if we assume an average people per unit, we can then determine how many units do we expect to see in the 20-year life of the plan. Then we, in the past, have gone to looking at that, you mentioned the 2.25, and for the single unit dwellings, it was 3.35. And those were for the lack of having any other number published, so to speak, were municipal planning strategy numbers that we used to convert the number of units to a ratio to reflect how many single unit dwellings we had and how many multi-unit dwellings we had. To your point, and it came up a little bit in some of the evidence in the past, was 2.25 might be too high for a multi-unit dwelling. And 3.35 might be too high for a single unit dwelling, or it might be too low. So these are the things that when we look at what data set we have to draw from, what Megan has shown here is the range from the regional centers out to the rural. The rural is not really a factor here because there aren't any services outside the light blue shade that would trigger a charge from a regional development charge perspective. And I guess when you reference a 1.5 for a multi, is there a data set that you would like us to consider or look at that provides kind of that consistent number or ratio across the municipality that we could draw from? So it's that kind of thing is what we're trying to gain from some of this, like, and trying to make it easy to understand and as fair as we can. So
I think that information is not generally publicly available because I don't know how granular the stats information gets if you can drill down to look at, newly constructed multi-unit residential buildings with a population per unit. But if somebody wanted to, it wouldn't be that hard to hire a consultant to do a study and to, if you wanted to randomly pick 20 apartment buildings that have been constructed in the city in the last 10 years and to ask the landlords for a head count of how many people are living in the units. Yeah. But I know in our portfolio, and we generally have large units, we are 1.6 people based on an actual head count and knowing how many people are actually living in the units. So it would be higher than the actual, real world average with the proliferation of micro units in new construction.
One thing that I think can take as a takeaway, I know in the past we've been able to do an overlay with Census Canada data, building permit GIS-based data. And we can see how granular that gets, and whether or not we can get some good numbers from that perspective, I guess. And then if we need to look at the level of exercise that you've noted of reaching out to individuals, we might be able to look at that at the next stage. But I think one of the first things that we need to do is look at what data do we have, knowing too that I think the last census was 2021, unless I'm mistaken. But
You are correct.
yeah,
I mean, it's pretty clear. If
Yeah.
you're using the numerator over denominator to come up with 2.04 people per unit, unless the number of people per unit that you're using to calculate the charge averages 2.04, you're going to over collect.
right.
Right. And so the average of, 3.25 and 2.25 is obviously greatly in excess of 2.04. So there's a built-in overcollection inherent in the historical model that's been being used.
Yeah.
And the percentage is not minor. Like we're talking 30 to 50%.
Yes. Yeah. Okay. So that's something that I think we'll take away and see where those numbers are trending right now, and then circle back with what we're seeing.
Yeah, I mean,
from published data sets.
Yeah, like literally the difference. I mean,
Yeah.
I did the simple math here, but we're talking like it could be an overcollection of a couple $100 million over, whatever the 20-year period. So that's very significant money.
Correct. Yeah.
All right, next we have James Goldstein.
Thank you. Just to follow up on Peter's question, point of clarification, do the numbers from Halifax, HRM, that are listed on this slide, do they represent a weighted average of single family, multifamily numbers of people per unit in each of these subregions?
I don't know off by hand. I think they're just unit rates.
Yeah, I'm just looking to see. I don't know if there's anybody from HRM from the planning side on the call that might be able to shed some light on that, but that could be a key takeaway on. Yeah.
Understanding this better and what went into it and what this represents may help answer Peter's question. I don't know, but either way, from his perspective, the persons per unit for multifamily is high from his perspective, and that may very well be. Another point of clarification. In the Halifax Water existing model, I'm assuming, and I don't recall, I'm sorry, that the percentage of single family and multifamily differs from the regional centers to the suburban to the rural. Is that correct, or is there one assumption about that split across all the subregions?
There's one assumption across all regions, and one of the points that came up, I think it came up in both hearings in 2014 and again in 2019, but I know it came up in at least one of them. Our rates are set on what we refer to as a postage stamp charge or a rate. So we try to, with some of these assumptions, come up with a type of dwelling or type of build that would trigger the charge and apply it, but it gets applied consistently. So somebody that builds a single unit dwelling in Middle Sackville is going to pay the same as somebody that builds a single unit dwelling in Dartmouth. And it's from that perspective of looking at it from the regional nature of the infrastructure.
Sure, I understand that. I guess I would suggest, though, that the regional centers have the ratio between single family and multifamily would be quite different in the regional centers than the rural. And I would think that could be pretty easily represented in the model. But we can leave that for now. But again, that may help bring down the urban center PPUs because they would be more heavily weighted to multi-unit.
Yeah, and one of the things, we see a lot more multi-units going up in areas outside the regional center than we have in the past. So it's something different for HRM to see that. There's a couple of things that can be debated and discussed as part of this and as part of the submission that you could have a set of single unit dwelling and multi-unit dwelling charges in the dark blue and a different charge in the light blue. But that kind of flies in the face of that postage stamp impact on regional infrastructure. So there's a couple of ways to kind of bring that conversation and debate forward.
Yeah, I wasn't suggesting what you just said, by the way, but I understand what you're saying. I understand equity is very important here. I am suggesting that you might look at how you develop the number of units and the number of people per unit in the different subregions.
Yeah.
All right, Peter.
I'm just curious, given the, this issue, why is the math being done on a per person basis versus, and given the parallel issue with you needing to wrestle the ICI on a per square foot basis, given that the per square foot figures or the square footages of buildings being constructed are readily available from the building permits, why don't you just do everything based on per square foot of building area?
And those are, I guess, the valid questions that we want to explore. And we want to have this conversation about some of these assumptions and numbers that we're using because it aligns with the current methodology for setting the charge. As we advance some of the discussion on the residential equivalent unit, it may be that we charge based on meter size. But we also have to kind of flesh out what does that mean from that equity perspective of a multi-unit dwelling may have the same meter size just by default of a single unit dwelling. And is it fair to charge that same charge? So we haven't advanced some of those fundamental foundation pieces yet. So some of these conversations might kind of might not feed into the model as much as we think, but we need to have that understanding of what the opinion is on some of these assumptions. And where I think where you're going to is on the square foot, if we just had a square foot charge and know what the typical, instead of looking at the number of units, try and convert what does that look like from a wastewater and a water driver for square foot build. And the old sewer redevelopment charge, that's what it was based on. It was square feet of a building. And I think I just have to go and see, how easily accessible that data is and does that make sense? So these are the conversations that we want to have.
Well, that data should be very easy to accumulate because you know what the per square foot rate is, you know what the gross revenue is for HRM for the building permits. Right. You could figure that out for 20 years in 10 minutes. And then you don't need to wrestle with trying to figure out, what's a new Walmart in terms of number of residential equivalencies.
Right. Okay.
then it would in large part dispense with this argument over how many people
How many
per
people?
per
Right.
per unit.
Okay, that's something that we can drill into.
All right, so on the topic of people per unit, is there anything else, any other discussion? We have lots of time on this topic, and since I'm seeing no hands that are coming up, I'm going to move on to our last point of discussion. So since no hands are coming up, I'm going to move forward, and we're going to end with population projections. So the graph that's on the screen, we have the time frame from 1996 to 2048, and then up here we have the cumulative population. As you can see from this blue line, this is StatsCan. This is what's happened to about 2021. This orange line here is what was used in the Halifax Water IMP in order to gain the infrastructure list. And we end with this about this many people. The green line are projections from the province for more people, and that 2048 number ends at about over 1 million people. So with this information and with how this graph is, it's a lot more population than what was initially known for the 2019 IMP study. What does the development community and the stakeholders of this call think about that sudden rise in population projections?
And some of that is, as we're sizing infrastructure, we're trying to size a charge to accommodate what's being contemplated. There's a bit of that realization of, because it's going to feed into a financial model from the perspective of the cost of the infrastructure. And so there's going to be that realization of, are we going to see that? Is there, we just want to get kind of an opinion on whether these numbers are going to be achievable and how those work. And knowing that historically we've done the 1 year check-in and for the plus minus 15%, but also the 5-year update, knowing that these numbers can be part of that 5-year check-in and the 1 year check-ins.
All right, James.
Thanks again. Sorry, just a quick question. Could you provide the population numbers as best HRM or Halifax Water understands them from 2021 to 2024? The actual data. I'm assuming it's along that green line, but it would be helpful to see what the numbers are.
And that's like the people coming in. There's always a calculation that we can backtrack from the number of units we collected, but are you talking about like the people growth?
I am talking about the people growth. Does the province not have that data on an annual basis? I mean, I realize it's not a formal census, but do they have that data? And I guess another point of clarification, the green line is the Nova Scotia target migration. That seems to me different than a projection or a forecast. That's a target. And is there any clarification about that, how likely it might be? It's extraordinary growth. And as you pointed out, double the rate that was assumed 4 years ago. And I realize there has been very significant increase in growth, but whether that's to be expected is certainly unknown. Any clarification on that?
I can, we don't have the numbers for the 2021 to 2024. It is something we can look at and get back to you about. I don't have anything to say on the green line.
Yeah, we know that HRM has been seeing about 4% growth a year since 2020 or 2021. So we can circle back. We're in constant conversation with HRM's planning group on populations as they go to inform the IRP updates. And then we are going to be having ongoing conversations with representatives from the province, and we can get some feedback and input on the green line.
Just one quick comment on that. I mean, that seems so important. It's going to drive not only our DC, but the IRP and the capital plan and everything else. So, I mean, it's absolutely critical to get clarification from HRM on that. And where that growth is expected is also very, very important for infrastructure planning and capital planning.
Those conversations are happening to inform and as part of the IRP update. So we have a good team in place to pull all that together.
Okay, I don't see any hands that are coming up. We have lots of time to talk about the draft, but seeing there's no further discussion, I will go in just for kind of the summary of today's workshop. Okay. So the summary, today we outlined the engagement plan for the interested stakeholders. We compared the 94-94 model with what was collected. We discussed the SUD to MUD ratio, discussed people per unit, and discussed the population projections. The next steps that are upon us is that we're really looking for your feedback. This video recording will be posted, and we'll look for feedback within the next week of when it's posted. This is the first time doing it, so please let us get just a little more time for this one, and please email rdc2025@halifaxwater.ca. It is a shared email account to kind of gather that feedback. And if you have any colleagues that are not able to make it but would have feedback, we'll gladly see it from there. You can visit our engagement website, where we'll be posting this PowerPoint presentation, the video, and the information for our next workshop, which is in 2 weeks, talking about the infrastructure growth, the infrastructure list for growth. So that's something to look forward to in 2 weeks. And again, we have 2 weeks between the first and the second to make any changes. If you have any suggestions for feedback of the topics of the outline, we'd be glad to hear it. And we have this time over the next 2 weeks to really hear that. So is there any questions on that portion?
And I think I'm going to commit to a couple of things live and virtually. So sorry, Megan.
That's okay. It all gets transcribed.
Right. I think what we'll do, we heard a few things, and I took a few notes on some of the population data that might be available to us. And maybe coming from this, we'll have a list of action items or feedback on some of the things that we find, and have that available online as well, tied to workshop number 1. So things like what data sets are available that we can drill into to look at population per unit by unit type using our GIS model or our access to Census Canada data, or some of circling back to HRM and some of the numbers to see what's readily available. Looking at a bit more clarity on the growth between 2021, 2024. Do we have, real numbers, or are we just adding the 4% of growth onto it, and trying to capture some of those points that were raised during the conversation, and putting them in one document, so to speak, so that it's there and ease of access for future conversation, if that makes sense.
All right. I'm not seeing any hands at this point. All right. And I guess with that, Kenda, we'll end the workshop and we'll see
Yeah.
everyone in 2 weeks. Keep an eye out on the website as we post more information. And you will see that Outlook event kind of come over. Probably, I'm going to aim for like the week before to kind of get that Outlook, but you have all the saved dates to save those times in your calendars. And I look forward to seeing everyone in 2 weeks.
Excellent. Thank you, Megan. Thank you, everybody, for joining us, and hope to see you at workshop number 2.
All right. Thank you.